Well, taking a look at futures on your Monday, we do have some green arrows. Dow is up by 50, NASDAQ is up by 73, S&P is up by 14 and change. We have a big week of inflation data coming up. The Consumer Price Index comes out Wednesday at 8:30. Producer Price Index, retail sales, 8:30. Thursday. Joining me now, TJM Institutional Services Director James Iuorio. James, it's great to see you. So let's first talk about what I'm going to call CPI week, because this is going to be a very tricky report, in my opinion, because of the energy story. We saw food inflation start to creep into the report last month. An uptick, which was a bit of a surprise. Now you've got the oil price story on top of that.
So the oil price story is double-edged, in my opinion. I believe it's easy, and it's definitely inflationary because it's an input cost, and it kind of harkens back to the 70s where we were in that cost-push inflation period. But you have to remember, too, that accelerated oil prices, we still import approximately 50% of our oil. It's still hitting people at the pump, so it kind of serves as a tax to pull liquidity out of the system that may break up demand a little bit. Now, I'm saying that on balance, it's still inflationary. It's just I think it's a little less inflationary medium term than others think. But you said about the CPI, we are expecting a good uptick to 3.6. Some of that's based on the base effect, and some of that's based on the fact that crude jumped in August. Because in the short term, it is very inflationary. What's more important to look at is that core CPI was expected at 4.3 versus 4.7 last time. I think below that will give a little bit of a green light for the stocks going higher.
I don't know. I'm going to bring in Mark Tepper into this, but real quick, we're looking at oil prices, and we are a little bit lower today, but we're still sitting at $86 and change on crude, and this is the second highest level this year that we hit even on Friday. Mark Tepper, jump into this here.
Yeah, I mean, when you look at all the data out there, all the data, Jim, is pointing towards a reacceleration in inflation. You mentioned 3.6%. The Cleveland Fed's at 3.8%. The Atlanta Fed 12 months from today has sticky inflation at 5.5%. The Conference Board a year from today has it at 5.8%. So as we kind of look around and we survey the scene, what we are seeing is a one heck of a reacceleration in inflation. Yet the market is still pricing in 3 to 4 rate cuts next year. How would that be possible?
Okay. So the one thing that's not pointing to continued inflation that some people think is, and I'll give you that most of them are, is the wage picture. We saw those numbers back on the first. Those were bad labor data numbers. And the wage part of it, which a couple months ago, there was a lot of wage pressures, tons of headlines about different unions negotiating for big contracts. Now we're starting to hear that wages might be stabilizing and that the labor market is starting to fall apart a little bit too. I'll give you the oil thing. I think if oil trades above 88, let's call it 88 and a quarter bucks a barrel in the futures, I think we're heading back to 100, and we all know why that is. You know, we used all our dry powder selling out that SPR when we didn't need to, and now the people we angered by doing that, as soon as it starts to break through technical levels, we've already seen it. They already reaffirmed production cuts. I think they're going to put the screws to us and try to drive that back up to 100, which isn't even that far from now.
Jim, what about your investment strategy for this month and the rest of the year? There's, folks are coming back from the summer. They're back from the summer. They're looking at their portfolios. They're trying to make some adjustments, buy some things, sell some things. What do you tell them?
Here's what I think. I think the stock market is fine. Everybody expects the big calamitous collapse when we're coming into the recession area, but the recession could be okay for the stocks. We've been trading sideways for 2 years. For me, I like to look at technicals. A lot of people think that the technicals are some sort of voodoo, and it's not. It really what explains its momentum, what the broad market's opinion is. I think if we can get the S&P back above 45.50 after the CPI data, because we can't do anything until we have some sort of clearer picture on inflation. But if we can get the S&P back above 45.50, I think we're fine for the rest of the year. And though I don't give advice, I'll tell you what I'm doing is staying longs and increasing longs if that happens.
Is there a sector play in that then?
Sure. Guess what the sector play is? It has been for 6 months for me. It's oil. Oil is the big sector play because it's just, it's because it's absurd. Our energy policy has been ridiculous, and all it seems to be doing is trying to drive oil prices higher. So I'm along on that.
Well, when the president decides to destroy 7 leases in Alaska and sanction off land and make sure that the Saudis and the Russians are completely responsible for our oil needs here in this country, I guess you're right. Let's play that.
It's the most ridiculous ridiculous policy. In the same week once, they talked about denying access to credit markets for oil companies and then asked them why they were cutting production. It is so bipolar, their policy.
Liz Peak's on set, got a set for you. Question for you, James.
China released some inflation data this morning that drove stocks in Europe a little bit higher because it was better than expected in the sense that inflation was higher. It wasn't deflationary, it was inflationary. Do you have any response to that?
I do. I think that's good news. I don't necessarily hang my hat on a lot of what China releases because I'm starting to not hang my hat on a lot of the data that the U.S. releases because I think there's been some corrupted processes there, and certainly in China too. But on balance, this is good. We believed that China was having a very, very difficult time, and we want to start believing that the most of that is over. If that's true, we'll see today if copper can rally a bit and if crude can rally a bit. That, to me, will mean that the market believes that the numbers out of China probably are becoming less dire, that situation.
The economy in China is so much worse than what they are reporting, and I have a feeling that there's a lot of discontent underneath Xi Jinping, and we're actually talking about that in the next part of the show, so I won't jump on that. James Iuorio,
okay,
it's great
are you saying that shutting down an economy for 3 years, communist policies, isn't good for an economy? How dare you?
I know, it's crazy. James, it's good to see you. Happy Monday. Good to see you, sir. All right.